I don't know about you folks, but I have been eagerly awaiting this conversation with the one and only Beth Traverso, because I want to know, has Seattle, aka King County housing market simply imploded? We obviously have a lot of tech companies up there and their stocks have been all over the place. We have a lot of wealth effect that may be going into retreat. We are seeing big cities like Austin, Texas go down 22%, which for the record is a crash in my opinion. So is Seattle following Austin, Texas off a cliff? Is it just staying still? What the heck is going on, Beth? You are the top 1% agent in King County. So what's the story? What's going on?
Hey there. So great to be back. Good to chat with you. So yeah, it's been interesting out there. I thought it was fascinating to hear that stat from you about Austin, because I do know that it has been going down, but I did not realize it was that much. Last I heard, it was, I think 9% or something was the last I'd heard, and now 20. Wow.
Yep.
That's pretty extreme. So to answer your question, are we seeing that here in Seattle, King County? No. But we are seeing a shift in the market without a doubt. So there's a few different things that I've been seeing, the boots on the ground, like actual conversations with buyers and sellers and looking at what's happening out there in our market. So there's a few factors going on. So the first one is just that we have the seasonality that we have every year where the light switch flips back off, usually sometime between Easter and Mother's Day. And this year, it just happened earlier. It happened even before Easter because of all this chaos going on with the stock market, tariffs, all those things. So that said, houses are still selling even in the midst of all of that, the worst week when things were going down, and nobody knew what was going to happen. We still were seeing houses sell. So, however, I did also have several conversations with several buyers or buyers agents saying that their clients have decided to wait because their portfolio took a massive hit.
Yep.
And they don't feel like it's the right time. And when people don't feel like it's the right time, or they feel uncertain, like you were saying in the financial news this morning, the confident buyer or consumer confidence is down, people tend to stay frozen. Now, even though the stock market, I don't have a lot in stocks, but I do have some. I'm a real estate gal, so I've got a lot of real estate, but I follow it because it affects my business, and I do have some, but and mine went down, and then it seemed to largely come back, but it might be certain people with certain individual stocks or that are maybe taking a bigger hit, or just the overall psychology of it, which matters more than anything. We are seeing
it's really interesting because when I think of Seattle, think of the Bay Area, think of Austin, Texas, very tech-heavy cities. I don't think that's a surprise to anyone.
No.
There's this thing called the negative wealth effect, which also works on the upside, right? These cities are very much dependent on the NASDAQ, the tech stocks, right? Amazon, Microsoft, Google, Facebook, Dell, the list goes on and on. Each city has their set of clients or companies that work there. And if those companies take a 20, 25, 30, 50% hit, it's going to change behavior very quickly. It's called the negative wealth effect. So it doesn't shock me that you're hearing more and more buyers just say, you know what, not the right time. Because again, you got to remember these individuals are certainly in the top 20%, probably in the top 10% of earners. It's just a lot of their wealth is in stocks, RSUs, and options and the like. So when they take a massive hit, they're not really changing their life. They're just delaying.
Yeah.
So it doesn't surprise me that your spring selling season ended earlier than normal. The rest of the country is still in the spring selling season. Like for most people, it goes till June-ish. Right. You start earlier, right? You start in January where, half the country's still frozen. So it makes sense that yours finishes earlier. So let's talk about, what's really going on. So listings. Are listings up kind of month on month or flat, or you don't know?
They are up. I'm waiting for the April data to come out here very soon. But what I am seeing is that, so I follow in my hot sheet in the Northwest MLS what happens every week. You can toggle it for from today up to a week from a week ago. And every week I track it in my area, which is the east side of King County. So I've been noticing an interesting trend this last week. There's a couple things that are going into this, but the numbers are bearing out what I'm seeing. And that is usually I've been seeing the number of pendings, meaning houses that sellers accept an offer, it goes under contract, it's going on its way to closing, has been pretty even or exceeding the number of houses coming on the market. So new listings will be here and then pendings will be right about the same number or sometimes a little bit more, which is keeping our inventory low, which has been below 2 months inventory for a very long time. I think we're going to see that shift higher in April numbers and going forward into May for a couple of reasons. So here's some behind the scenes things, data is that I think we have not seen a surge in inventory this year, and we normally would have seen it by now. And it feels like it's been pushed further into the year than normal. Okay. And what I'm expecting is that in May, we will have a lot of new inventory coming on. Part of this is because my pipeline is very, very full. And the stagers that I work with, this is like the staging factor. Okay. So stagers are booking out almost 2 months. So as far as like if you want a stager stage your home in 2 weeks, you won't find one. It might take 2 months to find one. So now it's a big, and in our area staging is expected. I know in some areas it isn't. So just locally, I'm going by that I know there's a lot of inventory coming on because they wouldn't be that busy if there wasn't. And so I'm thinking that we'll see more coming on and definitely in May. And so we've got these multiple factors happening where buyers are holding back, fewer going pending, and a bunch of inventory comes on then our supply and demand, there you go. It's going to create at least some stabilizing pressure. And I think our months on inventory will go on. We probably will start to see more price reductions from sellers that are going optimistic on the price. So I coach my sellers to not go, we cannot risk going high on the price because it's not the market for that. And most seem very realistic and understanding of that. You have to react. You got to
meet the market. Yeah, you got to meet the market. Yeah. So I really think that Seattle, Bay Area, Austin, what we're going to see in these kind of tech heavy areas, especially if tech continues to struggle, is that rising inventory, softer prices, and transactions still staying muted. I think that's really where we are. And again, this, but this is all leading to my call that 2025 is going to be the cycle low for transactions.
Yeah, I see it coming. I really do, because there's just too much going on that's pointing in that direction. And another thing that echoes what you've been saying too is the lower end doing great. Yeah. So like the bottom third, no problem.
Yep. No problem. Yep.
We just had one yesterday that, sold great, new listing, boom, sold, full price, great offer. Those ones are moving, and maybe it's those folks are the ones that are just wanting to get on the housing ladder. Those are the people who
they've probably been waiting for 2 years, Beth. That's the problem.
Yeah, and they just want a place to live, and maybe they don't have as many stock options and things like that. I don't, their situation varies, but on the higher end, I am seeing that, and so I'm thinking that our mix is going to shift, and then that will show as price drops, even though if the house is. So a house may not be selling for, say, 7% less, maybe not. But if the mix changes, then it looks the whole market goes lower.
Yeah, this is what I actually remember a whiteboard I did in my Mountain View office like 3 years ago that all the doomers just ate me up for. And the median price is very easy to understand, but most people don't get it, right? If you line up 11 houses, house number 6 is the median.
Yeah.
For the last 3 years, the low end hasn't been transacting. So you erase 3 of those, the median moves.
Yeah.
If the environment we're in now, only the low end is transacting and you erase 3 of the high end, the median moves lower. I don't know why you guys are pissed off at me. This is just how the math works. Get mad at math. Don't get mad at me.
Yeah, it's just the math. And what that leads to is headlines that then furthers the cycle, because people see the headline, oh my gosh, prices are going down. And the interesting thing is the buyers that have been waiting to buy, we've said this many times, and your other guests too, that, if we see those numbers go down, and people that are waiting for those numbers to go down to buy, like, still aren't going to buy, most of them, because then they'll be like, oh, well, why would we buy now? It's not a good time. And if there's something that happens to make those prices go under, the falling knife theory, which has been going on for as long as I can remember. And the market that this feels most similar to me in recent history was the summer of 2022. Maybe not quite as much as that, but getting
when rates
somewhere it feels like that, where all of a sudden everything just kind of took a stop, and that was when the rates spiked, and we had to have a lot of difficult conversations with sellers, that we have to just be realistic that this is what's happening in the market right now, and adjust accordingly. And if they're buying on the other buying side, like, well, you may, if you sell for less, if you're buying and selling in the same market, it's kind of a lateral move. And if you sell for a little lower and then you buy for lower, okay.
Yeah, win-win. Yeah, it can work. Yeah. One of the things I wanted to ask you about, this is a total left turn, and you may not have enough history with it yet, but I did see that Washington passed rent control. Any early thoughts from you on rent control in Seattle?
Yes.
Do you see any investors giving up and saying, I'm going to sell? Or what are people talking about?
Sure. So there are a lot of mom and pop investors that are bowing out.
Really?
And that's been happening for a while now, because the atmosphere has really been nothing short of hostile toward housing providers for the longest time. And especially in the city of Seattle. And I did own properties in Seattle, and I sold them in 1031 out.
Get me out of here.
Another part still in Washington, years ago. And it's only gotten progressively worse since then. And the risk is very, very high for a mom and pop. They can't necessarily afford to float a house that's negative cash flow, or not getting any rent because somebody decided not to pay and there's no consequence for an unlimited amount of time. Another thing to think about in the state of Washington is that our property taxes are not fixed like they are in some other states. We don't have income tax here, which is wonderful, but property tax tends to go up every year. So if you have somebody in there with a locked in low rent that you can't increase much, and that there actually is another bill trying to go through to make it so they can raise the taxes 3 times as much in a year.
Oh my gosh.
So what's that gonna, and then you have the insurance costs and all of that, and then just the overall risk factor. And somebody looks at how much they can sell a house for and take that money to do something else with. A lot are choosing to do just that. So
this is so common, it's predictable.
Yeah.
Right. California, we went through our rent control. I think it was 2019, might have been 20. And we saw over the course of 18 to 24 months, plenty of mom and pop investors go, uncle, I give up. I'm out. Maybe they've owned them for decades and they weren't really, maybe managing to market rents, but they just saw the writing on the wall. They saw the hostility. So what happens?
Yeah.
They give the tenant notice saying, I intend to sell. Depending on the state or whatever, they have between 30 and 90 days to get out, right? It's their asset. It's their thing. That tenant leaves. They have to go somewhere else. That house gets cleaned up and resold. So depending on what side of the fence you're on, if you want more inventory, great. By being hostile to mom and pop landlords, you're going to get that. But just realize the downside. You are going to have 10, 15, 25% less rental units. Guess what that does?
It increases the cost, and certainly when there's turnover. So there's a few unintended consequences here that I'm sure these lawmakers were made aware of, but for whatever reason chose to ignore. But it's hard to give chances to people that need under market rent, which it's the mom and pop landlords that were most likely to do that. A corporate landlord not going to do that. But generally speaking, but now why would you, if you're stuck where you're not able to ever bring it up? And then I have some long-term tenants, renters that have been in my houses for a long time that are below market rent. And now I'm thinking, oh my, now I'm going to be forced to automatically plan on these increases because I have to. Otherwise, there's no cap on the property tax increases and all these other increases, and then the risks and everything else, and just the cost of ownership going up, and then we have to increase. It's going to be an automatic increase to all the rents
every year.
Yes, I'm already thinking who I need to send notices out to now. I don't know if this is going to be when it still needs to be signed by the governor. There's some talk about he hasn't said if he will or he won't.
Oh, he will.
Probably will.
It's the state of Washington. He will.
I know. Our new governor has been a little surprising. In fact, he doesn't toe the party line exactly, but probably it will be signed. And so I'm thinking ahead, like, okay, I was going to not increase rent. I don't increase rents every year. Sometimes I
did not either. Now I do.
Yeah. And now I feel like I have to, just out of self-preservation. And
yeah, your costs are going to go up. They're not going to freeze property taxes for a year. So it's all these unintended consequences. Again, rent control is that one of those government interventions that feels really good. It's great to fight for, but nobody looks at the unintended consequences. In a couple of years, you will have dramatically, less rental units.
Yeah.
The habitability will on average go down because only the poor stuff will be there. And you're also going to get a double whammy of no future development. Not none, but you're going to get reduced future development. So it's going to be ugly in Seattle in 5 years or so is my guess / prediction.
Even more ugly, I would say, because I know there already was a few years ago, there was a headline saying that rental housing was down. I forget it was a significant percentage down already from the very restrictive policies that have been. It almost seems like nothing's too far-fetched to get passed, and it just kept going and going and going and going, and more people were doing what I did and selling and reinvesting elsewhere. Yeah. And honestly,
money goes where it's treated well. That's just what it is. Money goes where it's treated well.
And even though I'm a diehard for investing locally, I have to admit it's got me considering if there might be better options elsewhere, because everyone has their breaking point. So I'm just going to wait and see where this goes. But if it gets to a point where it's not profitable anymore and too risky, it's a business, and I'm going to be considering if it might be better to put those funds elsewhere. And then every house that I've sold that has been a rental always sells to an owner occupant. So
of course,
good for them. Those people now get to own their own home and get on the property ladder, et cetera. But so you're going to see fewer people purchasing as investments, and then you're going to see people selling as investors selling to owner occupants.
Correct.
And then the automatic rent increases. And then why would somebody build rentals if they can't even break even on them? And then where are you? And then I feel for people who are people come to me saying, I need an affordable place to rent around here locally. Can you help me? And it's like, well, I can try, but it's very difficult. Like, you're going to have to find roommates. You're going to have to go somewhere further out. It's hard. I've sympathized for the tenants too, but this is not the solution for them. So it's not going to make things more affordable for tenants.
Well, if somebody wanted to buy or sell in King County or Seattle, or better yet, get a referral to a top 1% agent anywhere in the country, Beth, how do they reach out?
Yeah, so the easiest way is through my website, BethTraversogroup.com, or if you Google my name, I'm out there everywhere, and feel free to reach out.
Yep, and she's inside school, so you can direct message her.
Yeah.
Thank you, Beth.